with schools and health services in the future. So even the very notion that a deficit itself is a bad idea is just stupid. Most people would have had or now have mortgages. That's deficit. You have a mortgage, you have a house over your head.
Question for Andy. People are going to release me.
Good luck with the operation.
Yes. And I would argue that if you are interested in setting up a peace study group, I mean, not next week, but after he's recovered from his operation, Andy has, I'm on the committee for a clean currency, campaigning for a clean Scottish currency, and we have members who come to that from all over Scotland, and we've got a couple of people who've travelled from Ayrshire tonight, but it's hugely important to get a group, and we've done one here in the west of Scotland. I mean, we've done lots, but I've been involved, and some of our members for here have been involved, and I think it's hugely helpful to be in a small group and tackle the issues. And as Andy said, things are really much easier to grapple with than if you're taking it a bit at a time and we're doing it in a small group. So if anybody's interested, Andy's left cards and we can get it set up. So now it gives me great pleasure to introduce George, who's going to do the next bit of...
My noble assistant is going to... I don't mean it.
Try again. So you should want to sing.
It just takes a wee
Warming up.
while.
Just warming up.
Yeah. How's it coming on?
You said that.
I did, yeah. There you
Very cool, thank you. Well, thank you for inviting me. I don't think I've been in Dumbarton Road for at least this century. I lived in Drumchapel. I was brought up in Drumchapel. So I always got the bus into town. I came down to Barrow Road. But we've changed all the bus numbers since I was I could do the 9 and the 29, but they've gone. So it's great, it's lovely to be back. I always annoy the cameraman because I moved back. Let's see if this is working. Yeah. Right, okay. What I'm going to do, Maggie suggested that rather than just talk about, go back over the economic debate at Conference on the Pound, we'll wrap that in. But I thought we'd bring things up to date. So I want to talk a little bit about currency and Brexit. And to do this, you have to understand about things called hedge funds, which are financial institutions in the City of London. And they're very strategic. This guy's one of them. The hedge funds have been funding Brexit. They funded the Brexit referendum, which wasn't, funded by pensioners in Brighton. It was funded by these guys who've got vast sums of money. And the hedge fund managers have also been the people behind Boris Johnson and funded his campaign for the Tory leadership. So a very interesting bunch of people. Now, how do they make their money? Basically by gambling. Now, but they do it in a particular way. They bet against things. So imagine you were going to the races and you bet against a horse losing. Okay? You might win or might lose. Bet against a horse losing. But the hedge fund managers do this in a particular way. I'm not going to the financial jiggery-pokery of selling derivatives and offsetting their investments. But essentially, what they do is the equivalent of when the horse gets to the finishing line, they shoot it. So they're bound to be last. They can rig the market simply by the scale of the financial dealings that they engage in, and it's all perfectly legal. So these guys, not all guys, these guys are particularly interested in getting rid of regulation, or bank regulation, particularly European bank regulation, which is going to do it by hedge funds. Very few hedge funds in continental Europe. They're basically a Wall Street thing and the City of London thing. Beginning to appear a little bit in Asia, but they're basically split between America and Britain. And the people in Britain do not want the regulation. And that's why they're in Europe. It's very self-serving. This is what's behind the Brexit campaign. Now, these people are seriously rich. I'm not talking about millionaires. I'm not talking about having a few hundred million. These people are billionaires. Now, there's nice World Bank figures. There's only about 2,500 billionaires in the world. Not a lot. And a lot of them are in the City of London, the big ones, all the big billionaires, a hedge fund. So, a few names, because you won't know any of these people. These are the guys behind Boris's campaign. Jonathan Wood. Jonathan used to work for Swiss bank UBS. They paid him £20 million a year for trading bonds. He didn't think that was enough. He was really annoyed he was being shortchanged. So he left set up his own hedge fund. All the hedge funds, by the way, though they operate out of the City of London, they're all in tax havens like the Cayman Islands and Bermuda and Isle of Man, for that matter. You also noticed that he was the largest investor in Northern Rock. Now, when Northern Rock started to go down the tubes, Wood and his hedge fund bought it. They bought it for a song, thinking that British government, on Brown time, would come in, bail it out, and they'd get all the money back, plus some. But Gordon Brown didn't do that. He's never got his money back, and he is livid against the party, livid against all politicians. And that's one of the other things that personally drives him. So he put half a million into Brexit. He paid for Boris's leadership campaign. You enjoy this guy, but another one of the big hedge funds. He's got 4 billion, no, he's American, but he's only sent him to run the branch office in London. He's been there for 20, 30 years. Another major friend and financer of Boris. Master of the Jed Forest hunt down in Jedburgh, got a Scottish connection, buying up bits of Scotland when he can find the time. And you can see that he's somewhat rotund. He still does his two bottles of wine for lunch. Right, these guys, these are nasty guys. Michael Farmer and David Lilly. They run a hedge fund which with RP Capital. They've made a lot of money shorting, playing games with metals and copper. 2013, the hedge fund made a profit, a return on its capital of 50% in 1 year. Now, just imagine think about what interest you get if you put your money in a bank or a building society. How did he get a return of 50%? Because he gambles. He gambles for hedge funds, big gambles. And these guys don't want any regulation, they want any limitation of what they do, and they don't want to pay any taxes on what they do. Again, huge, also they put money into Trump as well. And, this guy is one of my favourite, he's the richest of all. He's the richest of all. And he's the biggest funder of Boris and the Brexit campaign. His wife was on the Northern Rock board, which is interesting. She's a banker. And I do hope she was telling him what he was doing, because he was shorting. How he's making the moment, he's well known in the moment, because he's shorting every big retail outlet in the high street, like Debenhams. What that means is he sells them for cheaper than they're worth. And when you hear, the internet is driving the big shops off our high streets, that's not what's happening. It may be a bit of the explanation, but it's because guys like this are deliberately driving down the share price to put these companies out of business so they can make a fortune. He's well known for these seats all the time, and he's well known for, he orders gigantic luncheons. The city is full of gossips. Right? If you're down there, you know the people in the city. Right, so these are the people you have never heard of that are interviewed on the BBC that are funding what's going on in the UK. And these are the people, as Annie was saying, that we need to escape. It's no longer your generation to remember back to the 70s. It was the gnomes of Zurich who were running down the British economy. No, it's people like him. When we had the Brexit vote in 2016, the day after the Brexit vote, this is the man who funded Brexit. He went out and started shorting, which is selling British shares, selling the pound cheaply, in order to drive down the price so he could buy it all back cheaply. This is the man, one of the people centrally responsible for driving down the value of the pound on the basis of the Brexit vote. But he wanted a Brexit. These are people rigging something to make money out of it. Right, so we need to do something about this. Now, in order to understand, as Andy was saying, we have to control the financial system. But it might help because the fact that you kind of lump it all together, that we just break it into bits, because they're strategic bits. These different bits of the financial system don't necessarily all like one another, and sometimes they fight one another, and certainly the retail banks don't like the hedge funds, just to make life a bit more interesting. But these are the people we have to control. They do the retail banks, your Royal Bank, Bank of Scotland. What do? They basically lend to small companies, and they lend for your mortgages. They used to do different things, but their biggest profitable sideline now is mortgage lending. Right, so that's the retail banks. Fund managers, we get a lot. Edinburgh is a big centre of fund management. It includes the pension funds, it includes the big insurance companies that they then often farm out the actual fund management, i.e. lending. When you save money, put money into your pension fund, it goes ultimately to a fund manager, and they decide what shares or bonds, particularly bonds, to put it in. So they're important because they lend to governments when you buy government bonds. Investment banks basically big American, largely the big American banks, like Morgan and so on. They don't take your money and invest it for you. They invest their own money. They are gambling their own money, but they do it mostly in a technical thing called derivatives, which is putting fancy packages of financial assets and selling to their friends and so on around the circle. Private equity funds. These are new on the block, and they're growing rapidly. And these are private bunches of billionaires who pool their funds and they buy companies, but they do to own the company, to break it up, to make money quickly. They're not interested in long-term lending, they're only interested in making money quickly. And then the hedge funds that I've been talking about earlier. So these are the different groups. We need different strategies and different laws to manage them all. So, Andy's right in the sense of talking about currency, but it's not just a matter of, the currency basically refers to the retail banks. These other, the fund managers, the investment banks, the private equity hedge funds, they need the political control. Right. Okay, let's start going through some of that. Post-independence, RBS will be our biggest bank by far. It will dominate mortgage lending. It will dominate lending to small businesses. Right. Anybody who knows anything about RBS in the last 50 years knows how corrupt it is. After we nationalised it, in 2009, the government bailed it out. Gordon Brown bailed it out. But that wasn't the end. RBS had to find new cash in order to lend, need to recapitalise itself in the jargon, where the government simply paid off its debts, but it now needed money to get back into the poker game. So where was RBS going to get its money? It decided simply to loot the assets of all its small business customers. It had a unit called Global Restructuring, GRG, And global restructuring, if you were a small business, it said to you, you are now coming into GRG. We are going to revalue your company's assets. By the way, we've revalued your company's assets, usually 5 minutes, and you can no longer, the value of your company, we've written it down, so you can no longer meet your covenant, because if you let a small business has to collateralise its loan from the bank against the value of the company. If the bank deliberately makes the value of the company smaller, then of course you've broken the rules, you've broken your covenant, and so the bank can then repossess your company from you. And that's what they did to thousands and thousands of companies. But of course these companies really were valuable, and RBS GRG unit then sold the companies to another unit of RBS dead cheaply to prove in the books and to the taxman that actually there was nothing there, and then the other arm of RBS sold off these companies for a fortune, and that's how RBS capitalised itself. So did Lloyds, so did all the other big names. These people are responsible for destroying small businesses. The reason the UK and Scotland, well not Scotland, Scotland actually did slightly better, but the UK as a whole, the reason that productivity flatlined after 2009 was because small businesses were destroyed by the banking system. So we need desperate not to end up post-independence with RBS as our dominant bank, particularly a bank like that, which is not a friend of small businesses. Quick counter through solutions. Again, I mean, as Andy said, it's a very broad subject, so I just hit some iceboxes so you go away and think about it. Right. We need an alternative, obviously, to the retail banks, particularly RBS. Now, I was always in favour of, if RBS had still been in public ownership at the time of independence, and we were negotiating our share of UK assets, then we would keep our share of RBS. And RBS has now been restructured, so the bit in Scotland is run separately. And we could just have taken that, if it was in public ownership, we just said, well, we divvy up the state assets. Okay, we'll keep the Scottish bit of RBS. And so if it was in public ownership, we could just run it, fire all the senior management. Philip Hammond, the previous Chancellor, knew that. He was trying to sell the stuff off, the assets, sell RBS office. In fact, he was selling it off cheap, less than the government paid for it. He was willing to take the loss because he wanted to put back in private ownership. So who knows whether there'll be much left in public ownership by the time we get to independence. You can still get around this because an independent country licenses the banks that operate there. So RBS could not operate in Scotland without a license, and we could impose all sorts of rules on RBS, particularly on its lending policy and so on, and how it dealt with small companies. That still, they might be given the time to pull out, given that RBS clearly has a strategy of closing down as many of its branches as it can and becoming an internet bank, then we might have some difficulty through the rules-based system. So I think we need an alternative. We need a public-owned bank. Scottish Government, wonderful, setting up a Scottish National Investment Bank, should be operational next year. Being set up on a very small scale. I think once we have it, we need to expand it rapidly. Create a system of local savings banks, which Andy mentioned in passing. Most of Europe has savings banks. We used to have savings banks, which are go out of the way to take in private savings and recirculate that in the domestic community, in the local community. We used to have a wonderful network of these in Scotland. A lot of them were set up in the 19th century by local authorities. The legislation, by the way, is still there for that to be done again. We actually need new legislation. But I think we need to set up an integrated set of savings banks to take up private savings and with the proviso the money goes into the local community. And that should be a first priority for the Scottish Government. Gyro Bank, I think running out of time, we'll move on. Forced proper bank regulation. There's a watchdog called the FCA, Financial Conduct Authority, which is supposed to regulate the banks. It doesn't, because the people who are appointed to the FCA are perhaps the biggest scandal in British banking in the last 15 years was H-Boss Lloyds, which actually allowed its senior managers into business division to make an alliance with local mafia in London and feast businesses. What they would do is they'd say, you come to them, it's a small business, they'd say, oh, we love your business, let me give you money, here's £1 million, here's £1 million, here's £1 million. And then they'd say, no, you can't pay that back, so we're taking your company over, and then they give the £1 million to the mafia in London. This was going on. Now, Lloyds knew about this and did nothing about it because they were frightened of its impact on share values of the bank. And it took a decade of some of the small businesses who had been bankrupted to get the police to eventually take criminals to court and get them convicted. And then Lloyds still refused to do anything. It was only a couple of months ago that Lloyds eventually owned up, fessed up to all this. Now, who was the chairman of the FCA while all of this was happening? The head of the accounting firm that approved the accounts of H-Boss Lloyds that covered up all of the malfeasance. So that actually the people who run the regulatory authorities are the criminals themselves. So we need a proper regulatory system in Scotland from day one. Now, it's not easy to do, and it's easy to say, but unless we start working on it now, I and Andrew Wilson, an old friend of mine, we have our differences, political differences, we have a pint together. I produced a paper for the Growth Commission on how we should regulate the Scottish financial system post-independence. I thought the most important thing, and it went into the bin. We need to jail. The way the British system works is if the bank is corrupt, or makes a huge mistake, or it mis-sells, then the bank gets fined. The guys who did it, most of the guys, don't get fined. They don't go to jail, they don't lose their job. But the bank gets fined, which how do they get the money back? Well, they've got the prices up. You pay, don't you, the customer? This is a lunacy. So I think if there's genuine malfeasance, then we need to do what the Americans do, or what the Icelanders did, put people in jail. That will make banking cheaper. We have to make lending to small business subject to regulation. If you take out a mortgage, that's regulated, and if the bank does something wrong, the regulator will step in, the financial ombudsman can step in. It's not your fault. If you're a small business and borrow from the bank, it's not regulated, the banks can do anything they like to. When I was at Westminster, I spent 2 years trying to get the law changed. Nobody wants to change it because it means too much, it's too dangerous for the banks. We need to outlaw shorting, which is short we need to get rid of the hedge funds. There are hedge funds, small ones, in Scotland, in Edinburgh. Fortunately, they've been pretty useless and they've never made a lot of money. But we don't want this kind of thing going on as well. And you could, in some countries, ban it. In fact, the Bank of England has powers to ban if it wanted to. It's got powers to do most things under our written constitution. We need to get rid of it. So there are technical things and practical things that we can do. I've got some, it'd be interesting to have a longer debate sometime with Andy, because I've got some disagreements about how far we could go quickly to deal with fractional reserve banking, get clean banking and talk about it. I think there's a simpler way of getting towards that very quickly, which is to simply ban retail banks from trading in their own right. Now it's to go back to the situation we had in Scotland, where the retail banks didn't have investment arms, but they simply did the bread and butter of lending to you as customers locally. The 2008 banking crisis was caused because the big retail banks, RBS and HBOS, weren't just doing that, they were making money by lending to each other. We need to ban that. Now the Canadians have kept the old Scottish system of banning retail banks or high street banks from doing anything other than simply lending to ordinary small customers. Pass a law and do that. Go back to that. Canadians didn't suffer in the 2008 crisis because the banks didn't overlend, because they were not lending to each other. They kept the old Scottish bank manager tradition, you know your customer, your engineers. So there are some things we could do. I think there are problems with team banking. If it's fractional, goes back to totally what fractional reserve banking is what Andy's suggesting is that if a bank lends a pound, or whatever it's called, money, then it has to have a pound's worth of value in reserves. You can only lend. So a customer has to deposit a pound for the bank to lend a pound. Now, there are wee bits, the problem with that, if we went to that right away, is that bank lending, i.e. where you get the money for your mortgage, would be dependent on how much people saved. Now, there's nothing wrong with that. We'd have to move to a situation where we encourage more saving, which I'm in favour of. But at the moment, the problem might be that people weren't saving enough, so there wasn't enough for banks to lend, and therefore there wouldn't be enough for mortgages. Now, we can get around that partly if we have our own, we let local authorities build houses, and we let the National Investment Bank build houses, which would be a good thing for it to do to begin with, and I hope it will. But there are some technical problems that we would have to work through. So I think in the short run we need to be much more proactive on the regulation front. However, here's the bottom line: controlling institutions, regulating institutions, is not enough. Ultimately, we do have to control our own currency. Now, fortunately, SNP conference earlier in the year voted to introduce the Scottish currency as soon as possible. I don't know what that means, so we need to get the pressure. Here's why we need Scottish currency. There's more to it than simply a clean currency only. However you do it, banks ultimately can only lend if they have reserves, and the reserves, you can specify legally what the reserves are. If a bank can only lend money if it has a Scottish reserve, i.e. Scottish pounds, then we control bank lending because we control how much Scottish currency, Scottish government, Scottish central bank gives them. The ultimate way to control banks is you have to control the currency. If we kept the pound, we would not be able to control the banks, even if we passed the rules to say we could. And in fact, I still haven't got a decent answer from Andrew Wilson on this. If a bank gets into trouble, as they all did in 2008, what happens? The government has to come and we put money into them to bail them out. Where did the Treasury get the money in 2008 to bail out the banks? It didn't, tax you. It didn't come from taxation. The government simply invented the money and used that to pay off the bank's debts and bring RBS and HBOS into more or less public ownership. If you can't create your own currency, you can't bail out a bank when it's in trouble. So I'll tell you what's going to be a major issue when it comes to the Scottish independence referendum. And we keep the pound as interim, which is what Andy Wilson wants. But if we keep the pound, and that's all that's there, the Scottish government can't invent pounds, so if a Scottish bank was in financial trouble, it couldn't be bailed out. And somebody's going to notice that, and Andrew won't give you an answer to that, Andrew, because there isn't one. We need to have our own currency in order to control the banks, in order to make sure the banks don't collapse and take your money with them. The local control over interest rates, once you control your own currency, essentially you control the flow of assets and reserves going into the banks, and therefore you control interest rates. Right? If there's a shortage of money in the system, interest rates go up because money's in short supply. So you put more money into the system. If there's too much money in the system and interest rates are falling, so you can think about the money going into the banking system as a tap, like water going into a bank, going into a bath. Right? The tap is interest rates. You control how much money is in the system, and therefore the liquidity and the lending in the system by controlling interest rates. If you have your own currency, that's ultimately how you control interest rates. Without your own currency, we don't control Scottish interest rates. Interest rates will be set in the City of London, and will be set by people like the four obnoxious individuals we saw at the beginning. Easier for the Scottish government to borrow. If you have your own currency, you're lending to the Scottish government by buying its bonds. So if we don't have our own currency, we have to raise money in London. So we'll have to borrow money in pounds and pay it back in pounds, so we need a foreign currency to pay back our loans. If we have our own currency, when we borrow from each other, the Scottish government will essentially be borrowing from you, you would be buying, hopefully through various mechanisms, Scottish Government bonds, which would be covered by Scottish Government currency. So it makes Scottish Government borrowing easier. We borrow from Scotland, from Scottish people. If we don't have our own currency, we borrow from the English financial institutions. Foreign currency earnings through seven. That's right, it's a simple process. Right, oil company in Scotland sells its oil. Oil is traded in dollars, so it now has dollars. You say to that oil company, you have to pay your taxes in Scottish pounds. Where does the oil company get Scottish pounds? It has to buy Scottish pounds with its dollars from the Scottish Central Bank. So everything we export earns foreign currency, the foreign currency ends up with the Scottish Central Bank. So that means, so you've got about 20 billion pounds sterling equivalent in other foreign currencies coming every year. Stays in the central bank. The central bank simply, created the money to buy that. So, in 10 years, there's 200 billion pounds sterling equivalent. That's your sovereign wealth fund. That's your Norwegian sovereign wealth fund. Do that in a decade. Right. Ultimately, though, you need to save money. Now, what are you going to save it in? You're going to save it in assets. It could be your pension fund, wherever you put your savings. If it's in pounds, we are an independent country, that's money in the City of London, being gambled with by the four guys we saw at the beginning. If we have our own currency, we're saving by buying assets, which is in Scotland, stays in Scotland, helps Scotland to grow. So, there are problems about how you create the currency, but remember, Lithuania, Latvia, Estonia, they created their own currencies from standing start in 3 years. We've got a financial apparatus which is perfectly able to train people. It's perfectly possible to do it within the 3 years. So, Scottish currency as soon as possible, well, inside the life of one parliament. That's it.
Yeah.
You're famous. Thank you.
So we had a very interesting insight into some of the terrible banking scandals that took place from 2008 onwards, and some interesting notions. And I think both Andy and George have said, the issues are not simple issues, but they are manageable and doable. And obviously, regulation is huge. That's a huge aspect of having decent regulation when we move into independence. And also the basic fact of having banks that can be controlled and having the ability to control our own interest rates and not have people jumping into play with, to gamble with our savings and the money that goes into pension funds and so on. It's doable. It makes me feel optimistic that we can get through it. And when you look at countries like Iceland and how quickly they got a grip of their financial scandals, which were very severe, and they dealt with the people who created these scandals. So, yes, we got that.
One of the things that happened is in the last independence referendum was Gordon Brown in particular, rather ironically, was the person who put the frighteners on the pensioners. How can this whole financial scheme, to give a word that you were talking about there, George, how can we give pensioners, and there's a few of them in here, confidence that the new independent Scotland is going to be a safe place for their pensions?
But it's difficult to defend yourself when people lie, which is one of the things. And Brown was clearly lying, because we all know, and the Treasury is very clear on this, state pensions are a contractual obligation of the UK Treasury, because you have paid money in through your national insurance contributions, and they are duty bound to pay those pensions in perpetuity. Now, we might, in the negotiations with UK government independence, we might trade things off against assets and say, well, we'll do this and we'll do that. But ultimately, the responsibility for the pensions is the UK government. So to tell people that their pensions are in peril is a flat line. I think what we can do is to start, because I mean, you are the movement, the yes movement, is getting the pensions for yes, of course, is very good literature, is getting that stuff out systematically and getting the argument won before we end up in the actual storm of the referendum itself is very important. Again, it should be no news to anybody here. We have one of the poorest state pensions in Europe. Now, if we have our own currency, it's the key to creating the sovereign wealth fund. And I think Andrew in the Growth Commission report, because I discussed this with him, he was very loath to get into that. He wanted to make it as simple as possible, because basically he's trying to reassure people nothing's going to change. Well, lots of things are going to change, and of course there are risks. But I feel the way you mitigate the risks is to create a sovereign wealth fund which would back up, as in Norway, the pension system. Now, we didn't have this problem about pensions in the good old days of the 1970s. When the SNP was Scotland's oil, they always, we know what's changing the oil. People were reassured because the oil asset is behind the pension. So if we want to reassure people, then we need to say we have our assets. We have an asset class. But to get, ultimately your currency simply means that you can monetize the assets which are Scotland. But we need that currency, and I think, Scotland, unlike UK as a whole, has a trade deficit. We all know that. Scotland has a trade surplus. It exports more than imports. That means there is a steady, it's at least 20 billion a year, and if oil prices ever went up, this is a Holocaust at least. But as I mentioned earlier, we're getting at least 20 billion a year in foreign currency, which will flow directly. And this is how China did it. The Chinese export miracle from the 1990s on. It was the Chinese central bank that ultimately was taking in dollars that were coming in from those export sales. And China created the biggest sovereign wealth fund in the world. And that's what would guarantee our pensions. So I think you could link the currency issue to the pension. Let's not minimise the difficulties, but I suppose my disagreement with Andrew Wilson, Growth Commission, is that you can't, if your initial line of argument is nothing's really going to change, so it's all right, you become vulnerable, as we were in 2014, from attacks from the UK side. So I think we have to meet them on equal ground.
George, where did the money come from the National Investment Bank supposed to be coming from, and what would it be used for? You talked about housing, other things that envisage it being used for?
Right, the current plan is this. It's getting a £2 billion initial capitalisation, which is coming from Scottish Government, basically from the block grant. So it's money that we've got in hand from Westminster, from the Treasury. And it goes in, I think it goes in 500 million blocks over a number of years. So that's its basics. Now, if you have 200, if you have 2 billion, you can then fund, invest in assets. And what's being discussed at the moment is, one of the quick things you could do is you could invest in a lot of small, high-quality Scottish construction companies that are building houses. So you can then, those assets, if you I suppose you put 2 billion into housing and renewable energy projects. Right? The housing will earn mortgage payments over its lifetime, and the green energy will earn income from selling electricity over its lifetime. So, like any financial institution, you then roll up the future stream of income, and you sell that future stream of income for cash now. So let's suppose that the 2 billion of investment in housing and green energy from the investment bank creates assets which over the next 20 years will earn £50 billion. You can then mortgage those assets to get the 50 billion. So your 2 billion has now become 50 billion. And you then invest those in the next set of assets, and you then take the stream of income, roll it up, and mortgage that. And so your assets grow physically as you go along. Now, the only problem is, just briefly, that that might take time. And I think we'll be under a lot of pressure to do things. So I think we should find ways of putting other kinds of cash, which is why I want the sovereign wealth fund in particular. But the Scottish Government had its own currency, could borrow and put that borrowing into the National Investment Bank, so we could get up to, rather than have 2 billion, we could have 20 billion, and then you could pyramid it up, and we'd soon be talking hundreds of billions.
The National Investment Bank investments from private individuals.
No, at the moment, the argument is it would invest into projects like housing projects, green energy projects. It could lend to individuals.
The individuals be invited to invest in the bank.
Right. It could become a deposit bank. That is not the plan at the moment. I think because they were worried about going too quickly within the orbit of the UK. If we're still in the UK, you would have to get a special license to become a deposit bank. Now, I don't think that would be difficult, but it might take 3 or 4 years. But certainly, if we're still in the UK, we should do that. And then that would be a way to stick one up RPS, is to create our own deposit bank. Yes, talk about that.
George, you talked about the renewable energy industry. I asked you a question about renewable energy industry. If we to do that, we would need to effectively have state control of part of the economy. Can't do that under EU legislation. How would we be able to do that? We would need a state-directed economy, at least in part, at least for the first 5 to 10 years of the country. By the way, that doesn't make us Stalinist, that's how South Korea started its economy. Right? So, how can we do that if we're not allowed to do that? I mean, I don't want to blow holes in these things. I want to say this, but I mean, this is a real thing. You'll get an SNP government, which is effectively defaulted for the present system.
South Korea industrialized are absolutely right, with state money, and they simply said to their military generals, go and start companies. The first set of companies, this is where they grew rice, that's all they had. They said, there's a country over there, the shipbuilding industry is being closed down. And it's been quite recent because it was a nationalised shipbuilding industry. It's got modern machines. It's called Scotland. Go and buy all the machines. So all the machines came from Clyde, set up the Gulf practice and set up South Korean industry for shipbuilding. That was so successful, South Koreans said, this is a good thing, what's a good thing? That country over there where we got the machines for the shipbuilding, their car industry's just collapsed. We should go and buy all the machines for building cars. And that's what they did, that's how they got their car industry going. So, but it took state direction. Now, under EU law, there's nothing, nationalised industry is carefully legal. I mean, huge swathes of French and German industries nationalised. That's why it works very well. Right. There are rules about subsidising state-owned industry unfairly, quote unquote. My solution to that is to get better lawyers. Because it's never stopped the French or the German. So it's only the British government, from time immemorial, as soon as it gets a letter from Brussels, follows it and then gold plates it. So it's a question, and it's even within the present setup. There's nothing I would argue this with Scottish Government ministers. Take the Treasury on. Let's go to the European Court of Justice. Tie it up for 10 years. So there are issues, but I think this is to confront them, provided you know what you want. There are no EU rules against nationalising, but you have to pay compensation. Far be it from me to say that the Scottish Environment Protection Agency, run by me, would find a lot of foreign multinationals in contravention of the environment rules, and they would have to go away and give me their company.
I'm sure there's Lisa.
At the last referendum, we were spectacularly exposed in not having a kind of backup plan on the currency. 5 years have lapsed and we've had a lot of healthy discussion about what we might do differently. I just wondered what your view is as we are hopefully coming close to another referendum. It's almost like it's become quite dispersed and views are very different. What your view would be and how this might come together as some kind of cohesive position on currency as we enter a new, hopefully, campaign where we look to convince people that we can do it, and we've gone away and thought about it and we've come back with a much better plan.
Right, in the run-up to the Catalan referendum in 2017, the Catalans had set up a shadow central bank. We will know we are serious when we set up the Scottish Monetary Institute and stance it as a shadow central bank. I haven't seen that happen yet, and I'm worried. I'm sure you're worried. If we're serious, then you prepare to become an independent country. It's not just a matter of having a blueprint. Now, I didn't agree with much of what was in the Growth Commission report. Conference accepted it, so it was now the blueprint of the party. So you should start following up. It says we're going to have a central bank right away. I think we should be setting up a shadow. You could set up a central bank as part of the UK system. There's nothing to stop setting up a monetary institute of knowledgeable bankers who would prepare the nuts and bolts. I would be on a plane, and I suggested this to Andrew Wilson, personally, I'd be on a plane to Estonia, Latvia, and Lithuania to talk to their people and hire some of them because they set up central banks. So I think there is still a gap between the theory and practice. We have to, we will win the argument. I think if we have a referendum, it'll be 60-40. But we need to have courage of our convictions and start creating the machinery to do that as soon as we can. And I know around the Growth Commission report, a lot of people will be consulted. There are people out there in the financial community who are very friendly and will help. There was a subtext of discussion in the Growth Commission, which never quite made it to conference, never quite made it to public. There was a substantial group within the Growth Commission, commissioners, who want to move straight to the euro. And that's still a debate to be had. Personally, I think if you're to be gone to, and anyway, to get to the euro, you need to have your own currency so you can do all the conversion rules. So we still need our own currency anyway. But you're absolutely right. We need to try and get some of this discussion focused.
What rules do we need to meet to have our money acceptable around the world? So if we create our own Scottish money, why will it be acceptable in Japan, America, whatever?
People purchase foreign currencies because it has value. Value, not intrinsic value, because as you said, nothing has intrinsic value in gold. It's got value because other people take it. Now, I think a Scottish government would start off with relatively little debt. The GERS figures refer to annual deficits, but the Scottish Government would start off with relatively little accumulated debt, because all that debt is the UK Treasury's debt. We might take some of it, but actually it's quite complicated to divide up. So they might ask us to pay in a little every year. But, plus we have the offset of 8% or more of the assets of the entire United Kingdom. So we would end up, we'd start off with very little debt. Now, countries with very little debt are the ones whose currency is the strongest, because that's, the smaller your debt, the less chance you're going to go bankrupt, right? So you become that's how the big financial agencies and the agencies that assess your liabilities and your credit, your debt, and your creditworthiness, they look at countries and see what is your deficit and what's your combined debt. If you have a big debt, you have a higher interest rate. If you have a small debt, you are more trustworthy because we know we can be paid back. So I think if you look at the track record of small countries across Western Europe have lower. The government pays less to borrow than the UK, which is a humongous national debt. The bigger your national debt, the more it becomes, that pushes up your liabilities, and therefore pushes up the threat to anybody lending money to you. So, in the way the world financial system works, countries with small national debts are deemed creditworthy, like Switzerland, and so therefore their currency becomes somewhere where you put your money because it's safe. So I think it would work that way. Also, people look at the foreign currency reserves that you have, that your government and your central bank have, as a backup. Now, Scotland would have no problem creating foreign currency reserves. And it defies me why people don't understand this. If you are setting up the Scottish pound, you simply say to people, to pay your taxes, said the survey, and say it to the general public, and you say it to companies, to pay your taxes, you have to pay the Scottish pounds. Where will you get your Scottish pounds? You'll buy them with foreign currency. So every pound Scots we create and put in circulation generates the equivalent foreign currency, which is in the central bank. So we would be one of the few countries in the world with one-to-one reserves. UK government has tiny reserves relative to its government. You can even play wonderful games with this. When you, and this is what the Germans did when they converted the East German mark. I would do it here. And this is a difficult one to grasp. It's a fun one, right? You as a private citizen, here's what I would say as the Scottish Central Bank. When we convert your sterling deposit, let's suppose you've got 500 quid in the bank. When we convert that to 500 Scottish pounds, because you're a good citizen, we'll give you a 10% premium. So you now have £550 Scots instead of £500. We could do that. Great money. That would be wonderful. You don't work, maybe actually give you, so you can rush out. This is what happened when the Ostmark. Officially, the Ostmark traded East German mark traded one-to-one with the German mark when they converted. The German West German government said, no, actually you have 4 West German marks for every Ostmark you trade in. And it put a huge waft of consumption into East Germany. So we could do that. A post-independence bill would do that. But they won't hire me to run the central bank.
John.
Of the plethora of ideas you give us tonight, if you could get the Scottish Government to adopt one, what one would it be?
It would be to have our own currency. To say now, we are going to have our own currency and we're going to set in motion doing that now. We're going to set up the mechanism to do that so we can build. And as soon as we get independence, we're going to have it running within 18 months.
So I'll be all up for it.
Do you reckon, George, is it going to be on the agenda for the SNP conference?
The matter has been decided. And in the wonderful ambiguity, we have voted for the Growth Commission, and we voted to have our currency as soon as the incoming Scottish Government decides. I don't think we should let the debate go. I mean, we don't want to create. I mean, some people will be SNP members, we don't want to have a firefight in public. I do think branches and the national meeting should, policy meetings should keep the discussion going and try and get more of a rather than being ambiguous thing as soon as possible. When you're be asked on the door, when you're knocking on the door, we're going to have Scottish currency, yes, we're going to have it as soon as possible. What does that mean? It won't work on the process.
And of course, we've got Andy's guerrilla tactics, which is like quietly move around the country and get little groups of people and convince them, which is also quite effective. Any other questions?
Just to be quick one, you hear about what we're going to call our own currency and everything, and all the usual insults get thrown around. So, what are the kind of most common arguments against it, and how do we counter those? Because we're going to get them. So, what would
the name,
or not just the name, but the idea, the whole idea, including the name. That's just the silly example.
Yes. Well, I suppose it's the same up in a normal country. Why should we have our own currency? I mean, the Irish, we're in Europe, everyone has their own currency. It's normal. Why are we the only country? And why? Also, people hate banks. There's great reason. So that's usually why I hear them say, "What? I mean, get them foaming about what the banks do and say, well, why should these people be running our currency? Let's have a look."
And it is also about interest rates. I think that's quite a powerful argument to say you want to be in a position to control.
Your mortgage will be cheaper.
Absolutely.
I mean that.
Yes. Yes.
Would there be a risk for all of the additional regulations that you mentioned on banking, of all of the existing institutions just taking off and going to the regulation-free haven down south before we're ready with our own financial exposure?
That's a reasonable issue, given that the whole Trojan horse behind Brexit is these guys want to turn the whole of the UK into Singapore. To bring no regulations on finance and work. I think we there's enough institutions in Scotland where it was difficult for them to run away. But in the end, banks like to make money. And the fact that we can grow the economy faster, we'll make more money. So, in the end, but we're up again. If we don't leave, let's put it this way: if we don't leave the UK, the deregulation will be terrible. So let's to protect ourselves. This is what the risk of running.
Before Brexit, I think, had we joined the euro, would it be the same limitations as we have with sterling? Going autonomous is the only way to go.
For me personally, yes, because I think we have so much repair work to do in Scotland after the Union that we need to control our own finances and investment and industry. And also, the euro is essentially Deutschmark. It's not European currency. A rebranded Deutschmark. And looking at the way the German banking system protected its interests, because the German banking system had lent to Greece and to Spain and to some of the bit to Ireland. what the European Central Bank and the European Commission did in imposing austerity on Greece and Spain was basically so the German banks would get the money. And you will not convince me to join the euro until we have recast Europe in a way that does not happen. So I think it would be very dangerous to end up with the euro because it wouldn't just be for Egypt, as I showed earlier. You'd be really the rest of the German banking.
Talking, obviously we got Brexit, we're going through Brexit now and everything else, and we're not really sure the outcome, other than more than likely we will leave, because I think they're quite determined to make us leave. Would it be better for an independent Scotland to start off being a member of EFTA, rather than trying to go fully reintegrated with Europe, so we would have that control maybe a little bit more?
You're exposing my I tend towards the Norwegian, Icelandic solution, which leaves you in a single market. And it's close to Europe as you want to be. I think that would be particularly if we are part of the UK and we're having to go through some formalities, there will be some formalities to get back into the EU. The logistic and negotiation-wise would be easier. But I think there's a lot of attraction for a small country in being in the economic area and single market, but outside the EU. So don't tell anyone I said.
Sorry, I missed most of your talk, George. I was working tonight. But one of the pleasures of being a teacher is you talk to young people. Lots of young people are very political, which is an encouraging thing for our referendum. 16 I will work in fault. It's really on the Friday, the 20th this week, lots of young people will be out in the streets on the climate strike. Okay? Lots of Scottish young people will be out there. And I personally think it's a great opportunity for us to get the message that if you want a Scotland that is going to be there for you in the future, that isn't going to have its resources taken away and profits made from them, not to the benefit of the people, then the only way we can actually achieve that, particularly in the next few years, is to get independence of Scotland.
Yeah.
So it's just a wee plug that if you are available on Friday,
everybody out on Friday,
out there, George Square is the place to be, I believe at lunchtime, and put the message: if you want a climate future, then we need an independent Scotland.
Yeah.
Very, very important for us to take that positive message. And I think the point that we've been discussing a lot within the Clean Currency campaign is that if we do all the things we've talked about, create our own currency, control the banks and all those things, looking ahead into the future, we're going to need masses of investment to do all the things we want to do in Scotland, all the things that are going to address issues of the Green Deal. It's absolutely critical. And the other thing about discussions around currency and around what we'll call it and how we'll achieve it and all of that is that, in my view, it's enormously positive. It's going around doors saying to people, will we be okay? Of course, not only will we be okay, we're going to be prosperous, you'll have much better pensions, and we're going to make a real go of things and make our mark on the world. So it's huge. All these issues are huge and they all dovetail with each other, and it's a really important message for young people. So I'd really like to thank George very, very much. And he had his in the book of the car, so we we've done the whiskey. And,
I won't drink it on the train.
the ideas are complicated and all of that, but we have to grapple with it. And George has emphasised that again and again. And I think we will make an effort to try and bring Spank the Banker, because it is it's shattering to watch the extent, and they did a wonderful job in terms of a complete exposure of the levels of corruption of the banks. And so we will try, and we've been talking about bringing it to the Glasgow area so that we can get it shown. But thank you so much, everybody who's come, given us the support. There are some of Andy's books over there on clean currency, and also if you want to, if you're not part of Yes Glasgow North West and you would like to be, then just a hold of us and let's get your details. Thank you so much.
Thank you.